Minutes. The EU, though, fails to form a united response over AstraZeneca's vaccine following more concerns over blood clots and under pressure. The Credit Suisse CEO faces anger in the ranks over the Archegos meltdown. We'll bring you all the details in our continued coverage. First off, let's take a look at futures. Just got about 20 seconds to go until the start of trading across Europe and in the UK. You can see that FTSE futures are up 0.1%, only 0.1%. DAX futures up a little bit more, and you do have some pound strength this morning. That tends to weigh on the London benchmark index. It'll be the first out of the gate, though, so let's see how it opens up with the global macro movers screen. The left-hand column is the equity indexes, and it'll populate as they go live. You can see the FTSE is indeed the first up 0.1%. The IBEX in Madrid opening up 1/3%. And you could see continental indexes moving slightly higher than the FTSE this morning. As I said, the pound is gaining right now at 137.68, and with pound strength, you tend to see a little bit of weakness in UK stocks. The CAC 40 is open up more than 1/3%. The DAX is open in Frankfurt 0.4%. So European equity index is opening up higher, marginally higher across the board this morning. The U.S. equity indexes yesterday saw new records once again, boosted by a united Fed's commitment to continued accommodative monetary policy. Officials backed Chair Jerome Powell's dovish view. They were unanimous on the need to see more progress in the recovery before scaling back their massive bond buying program. As Mark Cudmore says, that was to be expected. We know what they're going to say, and they said what we knew they would say. Joining us now is John Rowe, Legal and General Investment Management, Head of Multi-Asset Funds. Why don't we start with the Fed minutes, John? Did we learn anything new, or were you, are we continued to be convinced that Powell isn't even talking about tapering?
I don't think we learned anything new, but we took out a risk that there was something nasty in there that people weren't expecting, like some sort of divergence or a weaker message. I think they've done what they can on the messaging front. If we were to see yields go significantly higher from here, then really markets would need him to do something more to actually take action. But we have seen this kind of stabilization in yields in the last couple of weeks. And to some degree, I think that does reflect just how steep yield curves have gotten, that there's so much priced in that it gets harder and harder for the market to price more.
You know, after the Archegos blow up, John, there was a lot of blame placed on central banks, as there typically is in that kind of situation. They're pushing investors out the risk spectrum. Some are overreaching and with disastrous implications. What do you think about high yield corporate debt in the U.S.? What do you think about EM junk right now?
So I think when you look at high yield, the spreads have just tightened in here a lot. It's been on a fantastic run. And in fact, credit generally has been on a fantastic run. If you look at the kind of benchmark investment grade side, then spreads are tighter than at the end of 2019. So I think people are right. We're definitely short credit overall, although we're focusing that on the investment grade side, because starting from those tighter spreads, it does feel like the risks are asymmetric. On that question of central banks and these types of blow-ups, I think there is some responsibility, but it's less around pushing investors up the yield spectrum. It's more about making sure that big, systematically risky banks remain well controlled. And the longer you go from a financial crisis, the more likely it is that those banks are looking for incremental revenue they're expected to find it, of course, by their investors. And in doing so, there is a risk that initially good ideas morph into bad ideas. Or levels of lending to some individuals that were constrained become less constrained. So it's then very much on the central banks to not just think about interest rates, but also kind of macro-prudential measures to make sure that you have enough capital in those banks to avoid them being systemic. And that is one thing that's really impressive, has been the way markets have digested these two relatively large scandals in a way that has been seen that it's okay, that the banks are well enough capitalized. This isn't a systemic risk. This isn't going to cause a big unwind of more general leverage. And so that in a way shows central banks doing their jobs well.
How optimistic should we be about the infrastructure plan from Biden? I mean, this isn't the kind of thing like stimulus that moves the needle fast, but many economists would agree it's the kind of thing that the U.S. needs, and if they're able to push it through, we're going to see a part two. What does that change in your world?
Yes, at about a $2.5 trillion plan, and as you say, it's a big plan. A lot of it will be net. Clearly, using 15 years of kind of clawback from corporates front ends the spending, so it is a significant fiscal boost. When you do look at these infrastructure plans, they do tend to take a long time to run out, as you said. So if you look back at the 2009 plan, then what was really interesting was actually after it was passed, 2/3 of the money wasn't spent until at least 18 months later. So that gives you an idea of how long the lag is. So it's actually our 2022 growth that we're amending, and we're reflecting the infrastructure plan with about a 1% pickup in 2022. So a nice positive that helps reduce the risk that markets get a kind of a hangover post the reopening, but as you say, a slower burn, which in some ways is what the US wants. We can't be on a kind of sugar rush the whole time. If you look at the stimulus during the pandemic, then actually US incomes have risen. We've got 10% excess savings on the US consumer balance sheet. So that gives you an idea that there's been a really huge, fast stimulus, and it is probably right that they move to a more gradual process. A lot of this should give investors confidence versus China, where China's obviously reducing credit this year. It's trying to normalize, and in doing so, there are some concerns emerging around what impacts that might have on the broader world. The US is looking to provide continued stimulus, just in a more gradual way.
All right, with that said, John, when I come back, I want to ask you about your conviction trades right now, what you think about equities and valuations, and what you think about, you already told us you were short credit, so we'll talk a little bit more about that as well. John Rowe, Legal and General Investment Management Head of Multi-Asset Funds, stays with us. Coming up, we're going to talk more about Credit Suisse because the hits keep coming, this time for Thomas Gottstein, feeling the heat from his own bankers. We'll have more details on a contentious internal call. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Welcome back to Bloomberg Markets. This is the European Open. We are 10 minutes into the session right now and looking at gains across European equity indexes, about 1/3 of 1% on the FTSE, the DAX, and the broader benchmark stocks Europe 600. Let's get to the latest on the Archegos aftermath at Credit Suisse. The CEO, Thomas Gottstein, is facing tough questions from his own staff this time. Bloomberg has learned that Gottstein held a contentious conference call late Tuesday with dozens of managing directors. Joining us to discuss is Danny Berger. So, Danny, what was this call about? What were the problems? Are people angry that they're losing bonuses?
Well, that surely has to be part of it, because for anyone holding stock options, for example, those are worth a lot less now. And because the first quarter Credit Suisse is now looking at a loss of profits, what does the rest of 2021 look like? Can you get those bonuses? Now, the questions weren't necessarily about will we see that payout. It was more about just bigger questions of how Credit Suisse faced so much more in terms of losses than its rivals. What was going on in terms of failure of counterparty risk assessment? Now, Gottstein himself didn't have any specific details, but he is facing also a board that's increasingly taking charge. Sources also told us that it was the board's decision to let go the chief risk officer and the head of the investment bank, not Gottstein. So at the moment, he really is stuck between more disgruntled staff and a board who's taking matters into their own hands.
What does this mean for Credit Suisse's strategy? You know, he had come in and changed course. Does he have to do it again?
Well, yeah, he wanted 2021 to be a blank slate, and in order for him to finally get that, I mean, he possibly could at the end of the year, but you'd have to imagine that there needs to be big changes when it comes to the culture of risk-taking at Credit Suisse. Gottstein himself on this call pointed to the incoming chair, saying that this is a great opportunity for us to reassess our strategy. Now, the board, for their part, wants a total review, so not just the various units that had these explicit problems, but wants to look at the entirety of the bank. So it does seem like the direction they're headed in already, after a lot of high-profile departures at Credit Suisse, that there could be just a widespread change in strategy as well, Matt.
Danny, thanks very much. Danny Berger, continue to cover this story for us. John Rowe from Legal and General Investment Management, head of multi-asset funds, is still with us. And John, we discussed this to some extent already, but it does show maybe it indicates a little bit of froth. When you see this kind of thing happening in markets, are you concerned about equities?
So less so about equities, but more about the need for those macro-prudential measures. I think equities themselves, we keep a very close look on, is the complacency there. And okay, so the VIX is now at a level of around 18, which is sort of the same as the average of the 2018-2019 period. So it has come up a lot from the kind of pandemic levels. But then when you look at, say, the sentiment of the AA-II bull-bear spread, that's at around 23. And historically, 23 has not been a warning signal. A warning signal tends for us to be above 40. And actually, a level of low 20s is consistent with average to above average equity returns historically. So no worries in the sentiment side. What is slightly worrying, of course, is this narrative. Everyone gets that the growth is coming. Everyone gets that there's reopening. So we are long equities with it over the medium term, but we're then surrounding that with some kind of asymmetric risk positions, such that if equities suffer a correction, we've got some things to help us out on the other side. What would you look to as a catalyst for that? I mean, if we start getting big inflation prints, is that a concern for you? So I don't think so. So people think of this link between high yields and equities selling off, but actually historically there hasn't been that. Even in periods where yields rise rapidly, there's a very kind of uncertain pattern. Often equities do well in that environment because that's all around growth. And of course, on the inflation side, they benefit to some degree from, they borrow in nominal terms, and then their revenues grow to some degree with inflation. So actually they're not necessarily that exposed to higher inflation. And also in terms of catalysts to really see a prolonged pattern of inflation, everyone expects inflation in the short term, but then actually most commentators, and ourselves included, expect that to kind of die off in the second half of the year and look more normal. So there are no obvious catalysts on the inflation side. I think really from here, you've just got to ask, it's almost what counts as good news. So we've seen big equity gains off the back of the higher payrolls. In the background, we're using a lot of alternative data, like looking at job posts, particularly in areas like leisure and hospitality, lower skilled workers, revenues of smaller businesses in more open states. A lot of that in the background, we're seeing big improvements there. So almost the bigger question becomes, what new catalyst do we have to keep driving equities higher? And that's what's in the back of our minds. But for now, we're on this reopening trend and then surrounding that with these alternative risk positions. So, but you're not worried about inflation, even though you see good data there, you see pent-up savings for Americans at least, and we see, prices rising on the semiconductor, on the chip shortage, certainly on dealers' lots. You're seeing big markups because there's a shortage of cars. You have the same issue with a lot of tech products. None of this concerns you as a non-transient inflation trend? Not really. So our point would be, if you go back to pre-pandemic, the US had unemployment at 3.5%, and it still struggled to generate any meaningful wage inflation. So we all just have to be conscious that in the background, there's some hidden structural force, probably a combination of technology and the globalization of the workforce, that's added deflationary pressure. And we've seen these big misses in inflation data since about 2013. So that structural force will still be there. When you look at something like the semiconductor issue, the semiconductor cycle is something like kind of 2 to 4 years. It takes that long to increase the supply and then build the new factories and increase production. So while again you can get some shorter term impacts, it's not a broad-based problem. To get sustained inflation, you need it to come through in wages. And it's really that wages side where we struggle to see the catalyst. For this time, it's different. In fact, we continue to see the technology there. If anything, technology has been adapted faster, which is why there's a shortage of chips. And technology is in and of itself an extremely deflationary force. You've only got to look at the free goods. We talked about them before in terms of things like Fortnite, and also just the quality improvements that you see because of those technology improvements in the background. Got it. John, great to get some of your insight. John Rowe is the Legal and General Investment Management Head of Multi-Asset Funds. He's going to continue the conversation with us on Bloomberg Radio at 9 a.m. UK time, and you can tune into that on London DAB Digital Radio. Coming up, growing worries that Astra's COVID vaccine causes rare blood clots, complicates the bid to vaccinate the world. We'll get the details next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
One of the critical things I think worldwide is for more information sharing about who has contracts, when are they going to free up those contracts for the poorer countries. We're urging that to all of the advanced economies and the manufacturers.
That was World Bank President David Malpass. Let's keep it on vaccines. There are growing worries that AstraZeneca's vaccine causes rare blood clots, and that could hinder immunization campaigns across the world, from London to Seoul, and risks prolonging the pandemic as well, obviously, with that. This is a series of unforced errors by the British pharma company, has turned hope into hesitancy, and, of course, we hope that can be turned around. Joining us now for more is our reporter, Susie Ring, who's written an extensive piece on this for Business Week. Susie, now that we have a number of other vaccines approved, do we still need to be so concerned about the fate of AstraZeneca's attempt?
We really do, and I think this is the thing that's getting lost sometimes with the narrative, that the AstraZeneca vaccine is particularly important, in some ways the most important, because of their commitment to lower middle income countries and the fact that they're doing it not for profit. So the AstraZeneca vaccine is really going to be the vaccine that a huge portion of the world is going to be receiving, and so any concerns around hesitancy is going to have a bigger impact than other vaccines in terms of bringing an end to the pandemic, and that's what we really wanted to get to on this piece. Obviously, the blood clotting reports recently aren't going to help that, and so we wanted to explore that narrative a bit more and raise the profile of the importance of this vaccine, both from a not-for-profit perspective, but also it's the most easily stored and transported, so the narrative really has a big impact in terms of hesitancy globally.
So it's a fascinating piece that you put together with Stephanie Baker, and it's not just the blood clots that are the issue, right? There have also been seemingly political moves, for some reason, I can't put my finger on why, against AstraZeneca, and not just here in Europe, but in the US. There was an unprecedented move to publicly almost humiliate the company for not including a handful of cases in the test results that it handed in. They later came through with that, and it didn't show any statistical difference. But why does it look like the world has it out for AstraZeneca?
So the AstraZeneca vaccine's really gone from kind of, as we say, favored child to least favored child in the last year. It came out really strong at the beginning. It was a front runner. It was backed by the US with over $1 billion in funding, and it looked really promising. And there's just been a number of setbacks that have happened along the way through, the pressure of the situation, but a number of unforced errors, as you say, around trials and half doses, and they had to pause for a long time because there was a serious adverse event they had to investigate, and that has just set it back. And particularly in the minds of US officials, it really got to a point where Pfizer, Moderna, other front runners just kind of outpaced it. And at this point, particularly the US rollout, it's kind of been slightly dismissed, it feels, and that's at a really critical moment for when it's going to be applying for emergency use authorization. So the next few weeks are going to be really interesting to observe. Obviously, this was all compounded last week by the US trial results. They came out finally with the results from these huge US trials that they've been waiting for. It was viewed as a much cleaner trial than the Oxford trials in the UK and Brazil and elsewhere. And then within 24 hours, we had the Independent Safety Monitoring Board coming out saying that they thought Astra had misstated its efficacy data. We've never seen anything like this. It was unprecedented. Within 48 hours, Astra had clarified the situation, and the numbers didn't seem to differ much from what they'd originally put out. But again, it was just another knock for this vaccine that's going to be so incredibly important for the world rollout.
All right, it's a great piece for Bloomberg Business Week, and a really important piece because, you know, when we talk to experts like doctors from Johns Hopkins or Dr. Fauci or our own Sam Fazeli, they tell us, you know, this is such a key piece of what we need to solve the problem, and the last thing you want is for consumers to be hesitant to take this vaccine. And the fact that they're doing it not for profit is also, I think, really interesting, almost ironic. Susie Ring, you can read her full story in Bloomberg Business Week on the Bloomberg terminal. You can see it on the web, or if you're old school, you can get the actual printed magazine. Now, let's take a look at what's on the move this morning in terms of markets, almost a half hour into the session with Danny Berger. Danny?
Matt, Anglo-American, one of the big movers to the upside in the Stock 600 this morning, spinning off its South African coal division, trying to move away from some of those more polluting type businesses. So that will be listed in both Johannesburg and London. Telenor also on the move up, now trading at its biggest daily jump in 3 months. They're going to be merging their Malaysian business with Axiata. That will create the biggest cell phone operator in the region. Finally, I want to get a look on Prosus because they had that monster block sale, the second biggest on record at about $15 billion of Tencent. I do want to point out that this is the Hong Kong shares of Tencent holdings that they sold, so that is different than the Archegos ADRs of just Tencent Music. But still, that sale means they have more cash on hand. They're still the biggest holder of Tencent holdings, but perhaps they have more flexibility for other deals now. A quick look at the macro picture. Pound finally getting a bid. Look, it had faced a lot of pressure, as you were just talking about with Susie, Matt, because the workhorse of the vaccination program looked to be under risk with possible links to that rare blood clotting. At the same time, dollar under pressure. Double whammy. Not only do we have stronger, more bullish markets, but as well as a Fed in their minutes still supportive of in terms of their policy, Matt.
All right, Danny, thanks very much for that look at what's going on in the markets. A half hour in the session. Coming up, we're going to speak to the co-chair of the multinational conglomerate, the Hinduja Group. We'll be speaking to him about family offices and regulation of this area of wealth management. This is Bloomberg.
That Norway sells way more electric cars per capita than the U.S.? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric.
Last year, Norway became the first country in the world to sell more electric cars than any other.
In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving... Oh, this place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is set to be a central issue.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to Bloomberg Markets. This is the European Open. We are a half hour into the session, and we see gains across the board. The Stoxx 600, the broader European benchmark, up at 436 right now. All of the European indexes, save the IBEX, are gaining, and that Italian index is unchanged right now. Let's take a look at the industry moves, so the sectors on the move inside the Stoxx 600. With the group ranked returns board, you can see basic resources are up with commodities, auto parts are gainers, as are consumer products and services. I think CP&S stands for that. Industrial goods and services, technologies, everything's gaining with the exception of insurance and personal consumer drugs and grocery stores, I believe is what that stands for down. And those aren't even falling very far. So it's an up day, risk on. Let's turn to the world of billionaires and the ways in which they manage their money. The Hinduja family, which leads the multinational conglomerate, the Hinduja Group, is partnering with a New York firm to launch a multi-family office serving other members of the world's ultra-rich as well. It'll provide investment management, banking, and real estate advisory services. But in light of recent events, Archegos, that have shaken the banking world and shown a light on the lightly regulated area of family offices, what does this mean for the new venture? For more, Guy Johnson, anchor of the European Close, joins us with a billionaire leader. Guy?
Matt, good morning. Thank you very much indeed. Yes, joining me now, GP Hinduja, co-chair of the Hinduja Group. The multinational conglomerate runs businesses from trucks to finance to media. It's controlled by GP and his three brothers, with bases across the UK, continental Europe, and India. Mr. Hinduja, good morning. Thank you very much indeed for your time.
How are you? Yeah.
I'm very well. We haven't spoken for a few years, but I've been tracking what you guys have been up to at the Hinduja Group during that time. You've expanded the number of verticals that you are in significantly, and this is the latest venture that you're moving into. Why is wealth management a natural fit for the Hinduja Group?
Mr. Johnson, you see, our late father, who was the founder of the group, was always in finance and trading. So this is nothing new for us. We were the first one, amongst the first ones in USA when we went into venture capitals. Wealth management has been within our blood. Financing and banking, this is part and parcel of our group. And whenever we find some good opportunities, being entrepreneurs, we get into it. Our objective is to build the largest global multifamily offices drawing on decades of experience and relationships nurtured over years. We have a strong expanding team in place to provide clients solutions to their complex financial requirements, the global platinum standard for its clients. And when your concern would be that what has happened to Credit Suisse, what has happened to this, our risk management, and we are very conservative. We have always treated the shareholders as well as clients' money as our own money. And we have gone through a number of pandemics, starting from 1918, the Spanish flu, then we had the 2 world wars, then we had the Great Depression of 1929, we had Black Monday, we had everything. Now, these things keep on coming. So we should not get concerned that when this is happening, there are opportunities also in it. And at the right time, if we are able to get in to this, it works well. That's our belief.
GP, can I just talk to you a little bit about what else is happening in the world right now? And there is an increasing talk post-pandemic that the rich that you will be serving with this venture need to pay more tax. Do you think that the rich need to pay more tax? Should the clients that you will be taking on with this business prepare to pay more tax?
Let me tell you, the governments who are really supporting at this time and are trying to see, take an example in US, you find Mr. Biden giving 1.9 trillion. You find in UK what Mr. Sunak has been supporting. Why all this is happening? So if at the right time, when the rich people are making more money, if they give the taxes, I don't see any harm in it. Because end of the day, so far as our group is concerned, we believe only in one thing, that work together at the right time. Now, when the rich people, otherwise also, in our group, everything belongs to everyone, nothing belongs to anyone. And we always, our father taught us that if you are generating money, you should try and see how to give away to the needy people, society. We should be more concerned about the lower class and middle class people. So if these taxes are coming, it is going to a good need for it. And we are not going to take away the wealth with us. Everyone has to die one day.
Okay. Well, I want to come back and talk a little bit about some of the things you've referenced there in just a moment. But let's talk about some of the other businesses you're in right now and try and go through them relatively swiftly. Can I talk about Switch Mobility, which is the bus business, the electric bus business that you have pushed and pioneered, and now there is talk potentially that this business could be, or you through Ashok Leyland could be looking potentially to merge this business with the SPAC or potentially raise private finance. What are your plans for this business? What are the funding plans for this business? Have you discussed the SPAC?
You see, as I mentioned to you, the group is very conservative. We treat others' money also as our money. Our electric vehicles are already on the street. It's not that we are doing something new. We have 2 verticals, subsidiaries of Ashok Leyland. One is Switch Mobility, where it is being manufactured in UK, will be operating in India. And also we have another one called OHM, OHM Mobility, where there will be operations.
Good morning, traders. I'm going to place a order to buy British pound at 137.639. So if you're looking to buy British pound, here is your chance. 137.639. This is the price. You have to place a order to buy if you want to follow this trade or if you want to trade British pound. Okay, I'll speak to you later after we will get filled.
Taking place even in the operations of the any successful company. So we have to be very timely to jump from one to other to third, and don't stick to our business plans.
Is that a yes or a no? Are you looking at raising money for those businesses? Do you? The time is right. You look at the valuations that are being applied to some of the electric vehicle businesses around the world. Are you looking to try and crystallize some of those gains and provide funds for these businesses? Would a SPAC be a useful venture?
Let me tell you, so far we have funded our own monies, and we have many proposals coming in for investments. We are just under considering that should we go for SPAC or for private. But we have number of proposals, number of institutions, number of banks pursuing us, and our think tank internally and the family members are thinking which will be the best route. But we have best proposals in our hands. And these electric vehicles will really be unique, especially for India and UK and Europe.
GP, we're beginning to run a little bit short on time, so let me just ask you some quick questions. The old War Office development you're doing in London, in Westminster, an incredible building with an incredible heritage. Ultra high net worth individuals are looking to purchase the 85 apartments that you have developed there. Post-Brexit, post-pandemic, does that market look any different?
Let me tell you, even today, there is a great demand, but we are selling them only by invitations. And our sales will start from next week. I already have a big queue of buyers, because not only it is a unique trophy project, but on the hotel side, it also has 125 hotels rooms. It has 9 restaurants. It has a roof terrace. It is a unique property, historical, which was meant for war. And Churchill and Lloyd George, the prime ministers were there. But now we have converted into love and peace. And there is a great demand. I hope one day you will have a chance to visit and see of your own what it is.
I look forward to it. I very much look forward to that as an invitation. Thank you. Just one other quick question as well relating to the business in India, and then I want to ask you about the future of the business as a whole. IndusInd Bank. I was talking to my colleagues in Mumbai this morning. They're curious as to whether or not you're looking to increase your stake.
We have already increased our stake, and we are awaiting for the new regulations to allow us to stake more, because we believe strongly that India in 10 years is going to be the second largest economy in the world. And the experience what we have in banking, we will definitely follow the rules and regulations. Once it comes, the group is committed to IndusInd Bank.
Final question, GP. You mentioned the next generation. You talked about your sons and your nephews and about how they are forward-looking and where they see this group going. There's been a lot of speculation about what the Hinduja group will look like in the future. How much will it change over the next few years? How different will it be in the way that it's run in 5 years' time, do you think?
It's a very good question, but I can tell you, there is so much potentiality in the group that the professionals, we are spending a lot of time, lot of money on human power. Once we have that strong human power, we immediately jump to that sector. So far as funds are concerned, there is no problem. We have sufficient funds to engage into new businesses. And the youngsters, the younger generation which has come, really are very talented, and they understand technologies, they understand green, they understand sustainability. The more and more you will see, our group will go on the technology side. At the moment, we have about 11 technology companies. We are also gone in a big way in cyber security. The company's name is CyberX. And we see the future of cyber security is great. The potentiality is amazing. So definitely the group has grown in last 100 years, and being conservative and being careful will always keep on growing. And these multiples, what you see in technology companies, again, there we are very careful. We don't like to jump with others' money. We like to go very conservatively, carefully, and that is why the institution and the banks love us. And they are always after us to fund, but we are careful in borrowings.
GP, I appreciate your time this morning. We all do. Thank you very much indeed for sharing so much of it with us. GP Hinduja, the co-chair of the conglomerate, the Hinduja Group. Matt, Boris Johnson's going to be in India at the end of this month. It's going to be interesting to see what kind of a relationship is established between the UK and India going forward.
Yeah, absolutely fascinating. It'll be also interesting to watch how much faster they can vaccinate their people. I think right now, a 7-day average of 3.5 million shots a day. But of course, they have a massive population to deal with there. Guy Johnson, thanks very much for that interview. Always learning something new with you. Coming up, we hear what IMF Managing Director Kristalina Georgieva had to say about global growth and the importance of getting those vaccines distributed around the world. This is Bloomberg.
Okay, traders, position opened at 137.639 on British pound. So as you can see, we hold 3 positions, 1 short position and 2 long positions. Okay, if you just joined us, well done. You entered into trade. You purchased pair British pound. So I'll let you know, stay with me, and I'll let you know when we're going to sell it and what we're going to do next. I'll speak to you later.
Kristalina Georgieva says the global economy will be $9 trillion richer by 2025 if the vaccine rollout is accelerated. Speaking exclusively to Bloomberg's Tom Keene, she said rich countries need to step up their support.
What we need from developed countries to support developing countries is a recognition that this is a multi-speed recovery and that countries that entered this crisis with limited fiscal space, with more vulnerabilities, and currently have less access to vaccines, need to be supported for the benefit of the world. Today, the G20 gave its blessing for a new $650 billion SDR allocation. This is one concrete way in which we can use the strength of the 190 members to support those that are in more difficult positions by boosting their reserves.
Divergence is the word of the moment. In your financial stability report, the acclaimed Green Book, which I read each spring meeting, you speak about an asynchronous and divergent moment. We have an asynchronous and divergent pandemic, all of us focused on the challenges, say, of Brazil, and indeed the unique challenges of India as well. Maybe that's the turf of David Malpass and the World Bank, but what can the IMF do to assist these nations beleaguered by COVID?
First and foremost, we provide clear and compelling case for accelerating vaccinations everywhere. The world economy is going to be $9 trillion richer between now and 2025 if vaccinations are accelerated and if countries like Brazil and India are in a position to do more to get out of the health crisis. And of course, the fund has been there for the most vulnerable members with significant emergency financing. We still have a large capacity should conditions be such that our members need more from us.
That was the IMF's Managing Director, Kristalina Georgieva, speaking with Tom Keene. You're sure to see more of that throughout the day on Bloomberg Television. Coming up, are investors buying Jay Powell's Goldilocks inflation message? Not too hot, not too cold. We'll discuss with Laura Cooper from our MLive team. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to Bloomberg Markets. This is the European Open. We are almost an hour into the session, and we're still looking at green arrows across the screen, about 1/3% on the Stoxx 600. Joining us now is Laura Cooper, Bloomberg's MLive macro strategist. And let's talk first, Laura, about the Fed meeting. Investors seem to take Jerome Powell now at his word. Any inflation that he sees will be transitory, and he's not even going to begin talking about tapering.
Well, and that certainly does appear to be the case. And there wasn't actually any new information coming from the Fed minutes yesterday. Yes, they have that kind of unanimous take towards policy. They aren't worried about any inflation fears. But I think what's interesting is the fact that, some members are actually wanting inflation to so-called run hot around that 3% mark. And I think that will present potentially a challenge should the Fed really struggle in terms of keeping those inflation expectations anchored. Next week, we have CPI prints that are expected to show those base effects from a year ago. So it really could be more challenging for the Fed to maintain that same policy line going forward, and whether markets react in kind.
What do you see happening with the dollar here? It's off a little bit today in terms of the Bloomberg Dollar Index, but it has outperformed expectations this year, even though I thought it was like something you grab when it's risk off, a safe haven trade. I guess it's not that?
I mean, typically, that's one property of the dollar, is that it does tend to have those haven properties. But on the other side of that, we also have this backdrop of just exceptional U.S. growth. And we are seeing just a strong story to hold U.S.-denominated assets. So that's why we are seeing the dollar on the front foot. Now, whether that remains to be sustained remains to be seen. But certainly, there are interesting patterns going on. Notably, if we look at sterling, it's really tumbled over the past couple of days as those vaccine risks come to the surface. We are seeing the euro catch a bid. So I think it's going to be more of a divergent story going forward than that flat-out dollar bullish case.
All right, Laura, thanks very much for joining us. Laura Cooper there from the Bloomberg MLive team. She's the macro strategist. You'll see her work if you type MLIV GO on the Bloomberg terminal. That's it for the European Market Open. Surveillance Early Edition is up next as we see equities rise on this Thursday to new record highs. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Concerned by the delay in the implementation of the European recovery plan.
Countries that entered this crisis with limited fiscal space need to be supported for the benefit of the world.
The G20 today is endorsing the extension of debt payments by official creditors.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance, the early edition on this Thursday, 8th of April. I'm Francine Lacqua in London, and here's what's coming up on today's program. The Credit Suisse chief executive Thomas Gottstein faces anger in the ranks over the bank's handling of the Archegos blowout, while he points to the arrival of new chairman Antonio Horta Osorio as a chance to reassess strategy. AstraZeneca faces further restrictions around the EU over its vaccine. Italy joins Germany and France in recommending the shot only for over 60s. And pro-crypto billionaire Peter Thiel urges the U.S. government to consider tighter regulations on digital currencies. He says Bitcoin could become a Chinese financial weapon. Now, there's quite a lot going on, not in the markets, but all these stories that actually are getting quite a lot of readership. But let's start with the Archegos aftermath at Credit Suisse. Now, the chief executive, Thomas Gottstein, is facing some tough questions. This time, it's from his own staff. Well, Bloomberg has learned that Gottstein held a contentious conference call late Tuesday with dozens of managing directors. Well, joining us to discuss all of this is Danny Berger. Danny, we heard from multiple sources that the call was intense or tense. What exactly was discussed?
Francine, a lot of it did seem to be sort of this big picture question of why Credit Suisse fared so much worse than a lot of its rivals, and at the same time, what does their risk assessment really look like that got them there in the first place? It's no surprise that these are the sort of things that the senior management would be asking, because you have to remember they've been awarded a lot of stock options, and this is the picture of the stock this year, down 15%. So all of a sudden what they've got paid is worth a lot less, and at the same time, now that Credit Suisse is facing losses for the first quarter, it means that bonuses are potentially under threat for 2021. Now, Gottstein himself didn't really give a lot of details. However, we also know that a lot of the decisions now are being made by the board. Sources also tell Bloomberg that the ouster of the chief risk officer and the head of the investment bank was the decision of the board, not Gottstein himself. So now he's in a position where he's stuck between both disgruntled staff and his own bosses that seem to be taking matters into their own hands at this point.
So, Danny, what does this mean for Credit Suisse's strategy here on out? I know that they have a new chairman who's actually coming from London, but then do we have any insight into what they do next?
Well, so Gottstein has said on the call, at least sources say, that in terms of questioning what do we do from here, he has pointed to the new chair saying, look, this is our opportunity to reassess our strategy. And the calls for reassessing have been really widespread. The board has said that they don't want to just look at the troubled units, for example, prime brokerage or where Greensill originated from. They want to look at the entirety of the bank itself. So we could see some pretty widespread changes. And you have to imagine if Gottstein Gottstein wants his blank slate, which 2021 was supposed to be, then this will have to be the opportunity that he takes to really change the culture of risk-taking at the firm.
Danny, thanks so much. Danny Berger there with the very latest on Credit Suisse. I know I feel like it's been our top story for 4 or 5 days, and we'll continue, of course, monitoring very, very closely. Now, the AstraZeneca blood clot drama also rumbles on. The EU and the UK drug regulators offer a disjointed message about who should actually be able to get the vaccine. In Britain, for example, under 30s will be offered an alternative to AstraZeneca, but several EU nations now restrict the shot to the over 60s.
The benefits of the AstraZeneca vaccine in preventing COVID-19 overall outweigh the risks of side effects.
Adults who are aged 18 to 29 years old should be offered an alternative COVID-19 vaccine in preference to the AstraZeneca vaccine.
The reported cases of unusual blood clotting following vaccination with the AstraZeneca vaccine should be listed as possible side effects of the vaccine.
Changes in preference for vaccines are business as usual, and this is a course correction.
Well, this morning, Bloomberg Businessweek has published a detailed account of the AstraZeneca drama over the past months. Stephanie Baker and Susie Ring report that the Swedish pharma company has had its share of bad luck, but it's also made a series of missteps that derailed its front-runner status and may well prolong the pandemic. Well, Bloomberg's healthcare reporter Susie Ring, also, of course, who authored the report, is now with us. Susie, first of all, congratulations on a great piece that answers a lot of the questions that we had. But why should we be so concerned about the fate of the Astra vaccine, given we have at least 5 other vaccines available?
Thank you, Francine. Well, I think the most important thing that people sometimes forget with all of this drama with the AstraZeneca vaccine is that this is going to be the vaccine that most of the world are going to take because they've made such a commitment to do it not for profit. And because it's so easily stored and transported, it's going to be the vaccine that's going to low and middle income countries mainly. So when we have this continued issues with it, when we have these continued kind of fueling of hesitancy, that could have a profound effect on those countries who will have little other option. And then that, in turn, could also have an effect on ending the pandemic.
So, Susie, I have to say the recent, blood clotting issue is so confusing, and the EU can't even have a united front in saying, what's risky and what's not. Will it impact vaccine take-up?
I think that's been one of the problems all along with this, because we have issues that come up with drugs all the time, of course, but we don't have the world watching and the scrutiny on this scale. So the blood clot issue, the EU has come out saying that it's a rare side effect. The label is going to be updated to reflect that. Obviously, as you say, the UK has decided to, for under 30s, offer an alternative vaccine. I think it's just further kind of muddying it in the public perception. And the most important thing that's come out of all of this is communication. This is a very rare side effect. It hopefully shouldn't fuel hesitancy. However, communication is the key here, and showing a united front, people being on the same page to offer the same messages to reassure the public is the thing that's been missing in a lot of this and is the most important overriding factor.
So, Susie, what does this all mean for a possible U.S. emergency authorization of the vaccine?
So this is the next key step for AstraZeneca. They said that they're going to file for an emergency use authorization in the first half of this month, but obviously that's been muddied slightly by the trial results last week when they came out with one number and then criticised by their safety monitoring board, and a couple of days later had to update that figure. The important thing about this is that actually for US use, the US is so far ahead in its rollout program, it may not make a huge difference for US citizens themselves, but obviously the world takes the lead from the FDA often, and low and middle income countries are going to be looking for that authorization to give that kind of extra seal of approval to the vaccine. So we're now in a situation where, because of all of the narrative that's been coming out, because of the incredible mix of data sets that Astra has, it's just thrown a few questions up in the air as to whether they would secure that and how quickly they can secure that at this point.
Susie, thank you so much. Bloomberg's healthcare reporter there, Susie Ring. Now, coming up, FOMC minutes reaffirmed the Fed's commitment to continued support. Stock markets surged to new records. We'll talk about that with Wei Li about her investment strategy as well. This is Bloomberg.
minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now to get straight to the Bloomberg First Word News, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The Centres for Disease Control and Prevention has confirmed the UK's COVID-19 variant is now the most common strain in the US, overtaking the original form of the virus. Despite rising cases across the country, New York announced it will reopen beaches in time for the Memorial Day weekend, and public pools will open the following month. Meanwhile, speaking in an exclusive interview, Indonesian President Joko Widodo told Bloomberg equal access to the vaccine is essential to end the pandemic.
I'm asking world leaders to prevent what is called vaccine nationalism. We must give vaccine access to all countries. Poor countries, developing countries, developed countries must be given equal treatment. If not, the pandemic will not end.
Now, UK Prime Minister Boris Johnson says he's deeply concerned by ongoing violence in Northern Ireland, which has seen more than 40 police officers injured in rioting in recent days. Local police report that a bus was set on fire in Belfast yesterday and that officers have been targeted with petrol bombs. Pro-British loyalists have been protesting against the placing of a border in the Irish Sea as part of the Brexit settlement. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, European stocks are climbing this morning after the S&P 500 notched up another record. Minutes showing the Federal Reserve's commitment to supportive policy, despite a positive outlook on the economy, is contributing to risk appetite. Well, joining us now to talk about the markets and everything in between is Wei Li, BlackRock Investment Institute Global Chief Investment Strategist. Wei, as always, thank you so much for joining us. There's quite a lot going on in the markets, and yet it's all about speculation about inflation. So there's nothing really driving the markets, apart markets trying to push back against central banks. At some point, will they, believe, do you believe the FOMC when they say it's going to take a while to recover?
Well, they have embarked on this new regime, average inflation targeting, and it's very important that they have credibility when they say that they're sticking to this new framework, right? So they also expected growth to pop a little bit and inflation to pop a little bit as we get into full reopening, which is what we expect in the coming weeks and months. Thinking about April, May, very likely peak growth acceleration. But that has been on the cards for a while. So it would be strange for them to blink at this juncture and start kind of waver in their commitment to staying low for longer and very accommodative for longer. So in our view, it's important that they actually are very consistent in their communication as we go through the hump that is coming up. In April, May, we're going to see really incredible eye-popping numbers. And in our view, we don't want to de-risk going into this peak growth acceleration, and certainly relying on the Fed continuing to be very accommodative is a central part of that.
But wait, is there a danger that actually some of the market repricing of inflation, then actually, once it moves from expectation to real numbers, that's when it gets really tricky for the Fed to stay still? Are we going to see a rip-roaring recovery as soon as enough people are vaccinated?
You're absolutely right. They did distinguish that they don't really care so much about forecast. They want to see actual numbers, and actual numbers are coming up in the coming weeks and months. So here the tricky piece is really, I would say, around June, when we have the June FOMC with markets, with the world having seen very strong real growth numbers and inflation numbers coming through, how they will react. So if you think about so far, rate rises this year not really causing a huge amount of concern for markets beyond the rotation. That is because Fed's credibility has not really come under question. But if in June, having seen those really strong numbers, they waver in their commitment to the new framework, then we could see market nervousness that perhaps is a bit broader than what we have seen so far this year. But in our view, their message so far has really been quite consistent around this new framework, and we expect them to continue. And a big part of this is also around how transitory is the inflationary pressure, how transitory is the growth pulp, and we certainly expect to see a bit of a hump as we go through the full reopening, but then moderating somewhat as we go into the rest of the year.
And Wei, in terms of your investment strategy, I think it's based on 3 pillars, which is one of transformation, globalization, and the new normal. What does it mean for technology stocks? Is it still something, is it too late to get into tech at the moment?
Well, actually, given the consolidation that we have seen in especially some of the large cap names, we actually think it's interesting entry point for investors with a longer term horizon. So if you think about so far this year, tech names have really kind of underperformed a little bit versus cyclical names because of the long duration nature of tech stocks. But because we think that the rate rise so far this year are not in response to shifting Fed expectations, they're in response to inflationary expectation and also term premium rising. That's a different type of rate rise than the taper tantrum rate rise, for example. So in our view, tech names have been somewhat unfairly punished by the rate rise that we have seen so far this year because of the long duration nature of the stocks, and actually that creates interesting opportunities for the longer term, especially as focus shifts to fundamentals, as earnings come into focus as well, and all of that should support tech names. So we recently reiterated our preference for the tech sector, given the year-to-date performance, but also the longer-term investment case staying intact.
Wei, thanks so much. Wei Li of BlackRock stays with us, and we'll have plenty more questions also on global taxation, because the drive to reform corporate tax is definitely gaining momentum. Encouraged by new U.S. proposals, the G20 sees a deal by mid-year, so we'll get the latest on that. And this is Bloomberg.
Preston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Yearly Edition. I'm Francine Lacqua here in London. Now, the drive to reform corporate tax gained momentum yesterday. That's after the G20 pledged to find a new agreement or an agreement on new rules by mid-year. According to Bloomberg sources, the U.S. is proposing a global tax deal that would actually tie corporate taxes to revenues. Now, the proposal would apply to multinational companies across industries, not just digital firms. Well, Wei Li of BlackRock is still with us. Wei, does it actually change any of your investment strategy if this goes ahead? Or because the timeline could be 1 year, 2 years, even longer, for the moment you could ignore it?
Well, this is actually a big focus in that, we have seen excessive spending and support, and now the time it is arriving to talk about how we're going to pay for it, right? So that's a big focus in terms of what we're monitoring, and it's easy to think that it takes time to come through, but just with the 2017 tax cut, corporate tax cut in the US, markets were not really positioning for it until it is very close to happening. So, I would caution against being too complacent about it would take a long time to come through. Now, having said that, when we look at the US corporate tax hike proposal and tax rise proposal around kind of the capital gain to come, and also kind of the highest bracket of income, the fact that they are kind of splitting the announcement and potentially splitting the passage makes me question how much of that would actually get through, right? Because it's also a negotiation process, and maybe the opening gambit will kind of represent a bit of a kind of the upper bound, but what we actually end up settling for would be less than that. And not to mention, if the pie is growing, if the pot is growing, then maybe the impact on corporates will not be as dramatic or feared, as dramatic as feared. So all of that just to say we have not changed our pro-risk stance, but we're monitoring very closely the development there.
Wait, when you look at some of the conversations that you've been having with clients about sustainability, this was really the story of 2020. How much more can it accelerate in 2021? Does a third lockdown in Europe actually, derail this green recovery at the margin?
I would say is shaping up to be even a bigger story for 2021. If you look at kind of the interest and flows going into sustainable exposures, last year was a record year, more than the total sum of all previous years. But this year, we're just still in beginning of the second quarter, but inflows already is more than half of the total flows of last year. So the trajectory and the momentum even seems higher than that. And if we think about kind of the pickup in sustainability interest, it very much is a result of the pandemic accelerating structural trend, including trends of green transition and thinking about infrastructure package focus. You can see that being here to stay. And our expectation, certainly what we have seen so far, is that the interest has picked up when markets are going down, when markets are going up, and when economies were closing and when economies are reopening. And that gives us confidence that this is really a structural trend here to stay. And the migration for portfolios to become more green, that is just getting started.
And so, wait, how do you take advantage of that? Is it through, there's also, I guess, bond issuance linked to some of the ESGs that certain companies do. Is that the right way, or is it getting rid of companies that are not as green as others?
Well, green bond issuance has been peaking, right? Like thinking about sitting where I am in Europe and more globally as well, including in China. So certainly that is an area of interest in terms of how to play this theme. But more broadly, when it comes to sustainable investing, there are different ways of doing that, going from exclusionary to more proactively looking to improve the sustainability score. So here I would say, depending on the objective, investment objective, and the outcome that we're looking to target, we should look at a wider range of kind of strategies to holistically think about how to improve that sustainable outcome of portfolios. And what we have seen is that investors are increasingly, clients are increasingly coming to us to kind of partner with them in this journey.
Wei, thanks so much. Wei Leader, BlackRock Investment Institute Global Chief Investment Strategist. Now, coming up, the White House considers doubling its climate commitments. President Biden stamping his mark on America's agenda early in his term. We'll talk about green investments with Hugh Van Steenis. This is Bloomberg. Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing out at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim. We're going to be riveted to that, and we're going to do what is required.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Credit Suisse Chief Executive Thomas Gottstein faces anger in the ranks over the bank's handling of the Archegos blowout. He points to the arrival of new chairman Antonio Horta Osorio as a chance to reassess strategy. AstraZeneca faces further restrictions around the EU over its vaccine. Italy joins Germany and France in recommending the shot for only over 60s. And pro-crypto billionaire Peter Thiel urges the U.S. government to consider tighter regulations on digital currencies. He says Bitcoin could become a Chinese financial weapon. Well, good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance, the early edition on this Thursday, the 8th of April. Now, a brighter outlook, but still dovish. Yesterday's FOMC minutes struck a Goldilocks tone to help push equities to new highs. Let's get straight to our top market story with our Danny Berger. Danny, market optimism carrying over in today's European session.
Yeah, that's certainly right. But look, if you are a dollar bull, perhaps it's not the kind of market action you would want to see, because on one hand, we have the higher equity markets, just risk assets in general doing better, more bullish, S&P futures up 0.3%. And then the double whammy of the Fed saying that they're going to continue to be supportive, going to continue to be bullish. So we're seeing the dollar fall today. Now, on the other side of perhaps a dollar trade, perhaps you'll have the pound, which is stronger today. I did want to point this out because it's up ever so slightly, just 2 basis points. So basically unchanged, but this will break about 4 days of losses for the pound. We have seen some of the concern over the workhorse vaccination effort, that is AstraZeneca, for the UK actually have an impact on the currency itself. So that could also be contributing to some of the dollar weakness, the fact that we're finally getting a tad bit of a bounce back in the pound. Now, while we're talking about currencies, I also want to give us a quick look at cryptocurrencies, and that's Bitcoin, because gains have been more or less stalling out over the past few days. It's fallen for 6 out of the past 7 days. Today, you can see that action over here. It is starting to move higher, but continually we've seen Bitcoin, after charting new highs, really finding it difficult to break above $60,000, despite the fact there are a lot of bulls out there who think it could go much, much higher than that, Francine.
Danny, Bitcoin may be moving higher today, but that's after some pretty tough words from billionaire Peter Thiel. I mean, I'm kind of obsessed with the story, actually, because, you know, can it really rival dollar as a reserve currency if there's a Chinese Bitcoin?
Well, it's kind of an interesting concept, because Bitcoin bulls themselves, people who like cryptocurrency, like the idea that this is better than a fiat currency, that it does rival fiat currencies. Now, Peter Thiel himself is a crypto bull. He has investments in it, but speaking at an event for Richard Nixon Foundation members, he did say that there are concerns about the threat to the U.S. and the U.S. dollar. Let's take a listen to that.
I do wonder whether, at this point, Bitcoin is also should also be thought in part as a Chinese financial weapon against the U.S., where it threatens fiat money, but it especially threatens the U.S. dollar, and China wants to do things to weaken it. So it's sort of, China is long Bitcoin, and perhaps from a geopolitical perspective, the U.S. should be a little bit be asking some tougher questions about exactly how that works.
So, Francine, I don't think this necessarily means that Peter Thiel is no longer a Bitcoin bull. If anything, he's just calling for more controls, more action to help make sure that it isn't used as a tool to undermine the U.S. dollar.
Danny, thanks so much. Danny Berger there with some pretty cool stories. Now, alongside his infrastructure bill and this week's suggestion of a global minimum corporation tax rate, Joe Biden's also considering upping the White House climate commitments. Bloomberg has learned that the president is considering a pledge to cut greenhouse gas emissions by 50% or more by the end of this decade. The green transition is at the top of both governments' and businesses' agendas ahead of this year's COP26 in Glasgow. As we emerge from the pandemic, Hugh Van Steenis from UBS says it's more important than ever that green investment is well defined. Now, in his recent Bloomberg opinion piece, he argues that though the EU has a chance to play a key role in setting those standards, they also have to avoid a one-size-fits-all approach. Well, he joins us now. Hugh Van Steenis, UBS Senior Advisor to the Chief Executive and former Senior Advisor to the BOE Governor, Mark Carney. Hugh, thank you so much, as always, for joining us. I mean, my concern with the Green New Deal is that we haven't even seen money for the EU Recovery Fund at the moment. So do the efforts of the EU that were really hailed as avant-garde, spearheading the movement last year, do they go to waste if we don't touch that recovery fund soon?
It's a great question, Francine. Look, I think, as you say, I think the transition to a low-carbon economy is one of the most important and biggest commercial opportunities for investors. There's something like $3.5 trillion needed each and every year for the next decade to invest in energy renewal. And I think, you know, as the Biden plan shows and the EU plan shows, we need both public and private finance. Now, what I'm struck by is that the private investors are moving their feet. Investments into sustainable investments this year are double last year's, which is double again on 2019, and climate-related investing is the hottest spot from the data that I see. But to your point, Francine, when I look at Europe, the new generation fund has been very, very slow to start. And I think some of that's political, but what I argued in the piece for Bloomberg is that some of it is also we're getting the wrong standards in Europe, and that Europe can't even issue on the standard it's proposing.
But so, Hugh, first of all, how do you avoid greenwashing? So how much greenwashing is there at the moment? Is it difficult to measure it, given some of the rules or the lack of rules, and also some of the transition bonds that we're looking at?
Well, look, it's a great question. So I think the answer is it's difficult to say, but because at the moment we've got a series of data from each and every company about their own footprint. One of the things that I did working with, Governor Mark Carney was to really argue for a single standard which was comparable, which was reliable, and which investors or companies can really get their teeth into. And TCFD is the in-word for that standard. To be honest, there's now a huge number of companies which actually adopt this, and New Zealand and the UK have made it mandatory. So I think the glass is half full. We're getting more data, and with that, investors can start to make better decisions. But we need more data. And I think my frustration with the EU standard is it's gone for a gold-plated standard, which is trying to get everything sorted in one go, rather than say, let's get the building blocks, let's get the climate data right, and then try and make some sensible decisions.
Who's getting this right? Is the US, because now there's the Biden administration, going to be better at this than the European Union? Or will the EU, at least in terms of regulation, still lead the way?
So I think EU had a head start and really could still win, because they came up with a really impressive and thoughtful package, from green bonds to green equities to the way to treat investors. But I said, the rule book is just for equities is 593 pages long. The rule for banks is another 200 pages. It's completely sort of unmanageable. And to give you an example, for green bonds, the standard in the US, the UK, New Zealand, which the standard setters have suggested, is it's the top 15% of properties. The Europeans have suggested it's just only the very best 1%. As a result, if you adopted that standard, you'd close the green bond market in Europe tomorrow. And as I said, even the EU can't issue on those standards. So I think the risk, like with vaccines, is that the EU could be overtaken by a more pragmatic US and UK, who are going for building blocks, who are going for existing standards, and who are moving their feet at pace. And I think in particular, it's been really impressive. The new acting chair of the SEC has done some great work setting up a new task force, and also joined some international alliances to really set global standards. And that, for me, is an area where the EU could risk losing its impressive head start.
Hugh, how should we look at the Archegos saga? So are there more Archegos out there, and have we learned anything and how to deal with it?
Well, it's a great question. Look, we're still working through this. But look, when I first saw it, it reminded me of the great book that Jim Grant wrote in the 1990s about previous boom and bust cycles in the States. And he had a nice line, which is, progress in engineering is cumulative, progress in finance is cyclical. And it's right, because history repeats itself, but it rhymes. It doesn't repeat itself, but it rhymes. And I think the reality is some of these problems aren't really anything new. What you and I both know is that world-class risk management requires learning from history, not just relying on fair weather models. And also, world-class risk management requires the best technology and real scale and tech and market savvy. And I suspect, as we look back on this in a couple of months' time, as the banks, the counterparts, and also the regulators look back, I think we'll find that some of these are old problems in new formats. And I think certainly my conversations with the regulators, that's kind of the questions they're going to be asking.
Hugh, thanks so much. Hugh Van Steen is their UBS Senior Advisor to the Chief Executive and former Senior Advisor to BOE Governor Mark Carney. Now, coming up, the Amazon union vote count in Alabama drags on. What does this mean for the labor movement across the U.S. and the world? We discuss that next. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition on Francine Lacqua here in London. Now let's get your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The European Union has failed to find a united response to links between AstraZeneca's COVID vaccine and a rare type of blood clot. Italy followed Germany and France by recommending it only for people over the age of 60. EU health ministers say they will continue talks on this very issue. The UK, meanwhile, says it remains on course to meet its vaccination targets, despite issuing new guidance effectively ruling out offering AstraZeneca jabs to people under the age of 30. Two private equity firms are reported to be preparing a possible takeover bid for Royal KPN, valuing the Dutch phone company at more than $15 billion. According to the Wall Street Journal, Stone Peak Infrastructure Partners is teaming up with EQT to pursue a buyout of KPN, which has the largest fiber optic network in the Netherlands. And Twitter has reportedly held talks about acquiring Clubhouse in recent months. Bloomberg sources say the companies discussed a potential valuation of roughly $4 billion before negotiations did actually stall. Clubhouse is now said to be in talks with other investors in a funding round which would value it at the same amount. The audio-based social network is barely a year old, but has surged in popularity with big named users. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, the Amazon union vote count in Alabama drags on. The retail, wholesale, and department store union says more than 3,200 ballots were cast. That's about a 55% turnout. Now, the election ended on March 29th, but the union spent several days reviewing irregularities. Well, joining us now is Bloomberg Senior Executive Editor. What a treat. John Farrar joins us for this very big story. John, thank you for joining us. First of all, how long until we actually have a result?
Well, the ballots have been counted today and tomorrow, so probably by the end of the day tomorrow, in this very closely watched union ballot in Alabama.
Yeah, so this is not about Amazon and Alabama. I mean, this could be huge for the whole of the labor market in the U.S. What could a potential union win mean for the U.S. and the world? Well, it would be a huge symbolic victory for the union movement in the U.S. I mean, clearly, the momentum is with them politically. We have a very pro-labor administration in the White House now following the election of Joe Biden. The pandemic obviously has surfaced a lot of issues about inequality in the workplace. But so far, they haven't really had a symbolic victory where it matters on the factory floor. So a victory here would send a huge message. Again, very symbolic in and of itself. The Alabama warehouse obviously is this very small facility. But the message it would send is that unions are back. John, you're in charge of all of our business coverage worldwide. When you look at what's happened with Uber here, do you have a sense that a lot of courts or some of these giga workers will have their status changed, and that will actually change business around the world?
Absolutely. I mean, clearly, again, the pandemic has focused attention on workers' rights. Clearly, we have seen some victories, important victories in courts in the UK and around the world. And what this has done, it has made consumers much more aware of these issues. It's turned it into a political, really big political story. Again, Joe Biden tapped into this on his way into the White House, and you see politicians all over the world now sort of scrambling to react to this. It really has, again, the Alabama case, the Uber case you mentioned, these are touching a nerve with people, and there's a sense there that, okay, a lot of people do benefit from the gig economy, from these services. But more and more people are asking themselves the question now, at what cost? And again, you're seeing that playing out much more strongly in the political arena than has been the case in the past. And again, the Alabama case today is just going to probably, assuming they win, of course, will just put that even more onto the agenda.
Yeah, and I guess it also goes back to Deliveroo that didn't do so great on its IPO day because a lot of big fund managers said, well, actually, you're not treating your drivers right. So, John, do you think a lot of the pressure will come from consumers, from people that buy parcels on Amazon, or will it actually come from shareholders, part of that ESG umbrella?
Well, I think it will come from both, but you're right. I mean, the world is changing. The climate story is obviously very front and center now for investors, for fund managers. It seems like every day Larry Fink and others are coming out saying that businesses need to be more accountable. They need to give us more information about not only carbon emissions, but how they're setting up their workplaces, about workers' rights. So we are sort of in the beginning here of what feels like a fairly medium to long-term reorientation, if you like, where fund managers and investors are responding to consumer demand to place more emphasis on this. And of course, yes, consumer demand is very important, but obviously pressure on boards from key investors is one is a very powerful way to change corporate behavior. So I expect this to continue for years to come. This is just the beginning.
And John, is there a part of the world that's, it's amazing to see actually Alabama maybe lead the way in this. Is there a part of the world that is almost a barometer of what will happen elsewhere?
Well, I think what you're seeing, I mean, the ESG movement, generally speaking, I mean, it has been very strong in Europe for the past, 4, 5, 6 years. Has gained traction. You see it right across the board, not only in terms of investor, shareholder pressure, but also in the issuance of green bonds and green finance. So this is a movement that sort of started and has been galvanized in Europe. But again, you sort of see it now filtering across the Atlantic, possibly a few years behind Europe. Biden's election is just, a symbolic example of how the conversation is changing. But again, you sort of see it in the messages coming out of the big investment and fund manager groups right across the U.S. that things need to change and that boards need to become much more cognizant of these ESG issues. So again, I would see Europe is sort of the cradle of this to a certain extent, but it's certainly this is a push that's going global. Asia perhaps less so. Asia, the Asian economy is very structured very differently. It's still sort of in a big sort of growth spurt as it sort of emerges onto the global stage. But it's probably only a matter of time before you see this sort of investor activism also hitting Asia's shores.
John, thank you so much. So good to see you also in the office. John Farrar, our senior executive editor. Now, coming up, we discuss Clubhouse. Bloomberg has learned that Twitter held talks in recent months to acquire the audio social networking app. I think it's valued at $4 billion, so we'll discuss what happens next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it's not just your favorite Hollywood celebrity or tech billionaire who has bought into the Clubhouse hype. Bloomberg has learned that Twitter held talks in recent months to acquire the audio social networking app. Now, the talks valued Clubhouse at around $4 billion. I had to read that twice. I actually didn't believe it yesterday when it came out, but these talks are no longer ongoing. Now, Twitter launched its own competitor to the app, Spaces, in late 2020, though it's still in the beta testing and not fully available to all users. So let's discuss all of this with our Bloomberg opinion columnist who covers tech, Alex Webb. Alex, I mean, Clubhouse $4 billion is a pretty impressive figure. What will Clubhouse become? So you and I are on it sometimes. I hardly actually have time to spend more than 5 minutes listening to some of the conversations. Could it actually replace Twitter?
I think it's very hard to believe that it replaces Twitter. I think the big question we have for Clubhouse is just how it monetizes in the years to come. There are all sorts of different possibilities. It kind of feels more like a function for something like Twitter, a feature for something like Twitter. But then, of course, people would have said the same about TikTok a few years ago. Well, Twitter is building its own Clubhouse competitor. One imagines they probably had a look in some of the books at Clubhouse as part of these talks, which probably didn't hurt their own efforts. The question is whether it actually becomes more like something akin to Sirius XM, which is a digital radio station, has all sorts of people with their own shows, the likes of Howard Stern, Ricky Gervais. If that actually is the model we go for, and people are paying to listen to figures that they respect or enjoy or are interested in hearing their content, and media figures can then use it alongside newsletters, for instance.
Yeah, I mean, I guess, the big holdback for Clubhouse is the fact that it's only available on iPhone. Unless they change that, or unless they change that quickly, does it really allow other competitors to come in? How difficult is it to replicate that model, not on Twitter, but just like on a new app?
So actually, having used both the Twitter and Clubhouse products, the Twitter one is not quite as smooth, not quite as good. It's really not super easy to replicate that Clubhouse experience. Clubhouse is also exclusive at the moment. It is only, is invite only. So I think the moment that it starts opening up to anyone and everyone, then it starts to have the content moderation problem, and something that any social network, once it starts to scale, has to tackle. Racist content, harmful content, all those sort of questions. How does it deal with that, or does it just keep its status as a sort of somehow exclusive product?
Alex, is there anything else coming? Is there, how will we be consuming some of our social media in 2 years? Is there anything else that we should be watching out for?
So I think products like Clubhouse, they actually are looking at the ways that content creators can monetize and build a profile. We've seen this, on Instagram, on YouTube. And Clubhouse, I think, if you put it in tandem with something like Substack, where people can write newsletters, get people to pay subscription fees, if you bring all these sort of things under one roof, which Twitter is clearly right now trying to do, and become the way in which you reach your audience, whether that be through audio or newsletters, that's a really compelling offering.
Great. Thanks so much. Our Bloomberg opinion columnist who covers tech, Alex Webb. Now, Bloomberg Surveillance Early Edition continues in the next hour. I was going to call it Early Clubhouse. Matt Miller joins me out of Berlin. Kaylee Lyons will be in New York. And this is Bloomberg.
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This here is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But you know, it's very close to that. You know, this is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. You know, I'm not talking energy only, you know, but in its broadest context, including the geopolitical dimension, including the cultural dimension.
Neom will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero-carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
Can't explain Neom or the backup set of PowerPoints and a video clip. You just need to be here. You need to, you know, breathe it. And specifically the startup mode and, you know, things happening. Buses all around you here.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I'm deeply concerned.
Hello, traders. New order came to us from our indicator, and I am looking to buy euro. The price I'm looking to buy 118,783. As you can see, it's filled right now. I'll show you where we purchased 118,783. We placed an order and it's already was executed. It's already filled. So you still have time because it moved lower. So if you want to trade euro, please do so. You still have time. And later on, I will tell you what next steps we're going to do about euro position. Okay, position opened on euro at 118,783. Don't forget to register if you want to for free 15-minute one-on-one coaching session. You have to go to company.co.uk trading strategy, and on the left corner, right corner, you will see kind of banner. Just click on it and it will direct you to the registration process. Okay, it's moving up, as you can see nicely. So soon probably I will place stop on profit for this pair, but in the meantime we're still holding. I'll show you right here. Okay,
for what the picture looks like in Europe, it is green across the screen. We are looking at the stock 600 higher by around 0.3%. At this point, the FTSE 100 in the UK up by about 0.2%. Interesting, though, the British pound was stronger earlier, but once again, it is now weaker against the dollar for the third day in a row. There were those questions around the AstraZeneca vaccine. It seemed that some of that cloud may have cleared, but once again, the cable rate is now sitting at 137.28. And in the bond market in Europe, I'm keeping an eye on the periphery because that is where we're seeing yields come in a bit more. We're down 2 basis points on 10-year BTPs right now, sitting at 67. 7 basis points. Here in the U.S., as you said, Francine, it was record highs yesterday, but on very light volume. It wasn't all too much of an exciting day, but again, that dovish Fed giving a lift to risk appetite. We could be looking at another fresh record come the opening bell in about 4.5 hours here in the U.S., with futures up 13 points. As we continue to see yields coming in, we're now down 2 basis points on the 10-year, sub 1.65%. It is a weaker dollar story today, but that is not helping oil. Still demand concerns, especially with cases spiking in India, which is the world's 3rd largest crude importer. That has WTI roughly now flat on the day, but still below $60 a barrel, Matt.
All right, very interesting stuff. A new record there on the S&P 500, very likely. We have a new record here on the Stock 600, the broader European index as well, Kaylee. Let's take a look at what's going on today that you need to watch for. If you were excited about Fed minutes, then get ready to have the ECB knock your socks off, publishing an account of its latest monetary policy meeting. That comes at 7:30 a.m. New York time. An hour later, we're going to get U.S. initial jobless claims. Watch maybe a little bit more closely. And then at noon, Fed Chair Jay Powell speaks about the global economy on an IMF panel. He will likely, Francine, continue to use the word transitory or transient. I'm not sure if transient actually is an exact synonym, but he will continue to say that inflation isn't here to stay. If we see a big spike, it's just going to be because of a low base, coming off of a low base and the comparisons. And he's going to push to create full unemployment and not to worry about tapering.
Yeah, I'm quite excited about also, the front loading by the ECB of PEP. So I'm looking forward to the minutes. I know some people are less excited about ECB than the Fed, but I'll be all over that, and I'll be watching Euro as well, Matt. Now, the fallout from the Archegos collapse continues at Credit Suisse. We understand that the chief executive, Thomas Gottstein, is facing some pretty tough questions. This time, it's from his own staff. Bloomberg has learned that Gottstein held a contentious conference call late Tuesday with dozens of managing directors. Well, with us now is Bloomberg's Danny Berger. Danny, first of all, we understand through multiple sources that the call was tense. What exactly was discussed?
Francine, they were really the big questions, the big picture questions, rather, about how we got to this place, how Credit Suisse fell through the cracks in terms of counterparty risk management, for example, and why it did so much worse than its peers. That's clearly a concerning question if you hold a lot of stock options, stock awards that are worth a lot less now. Gottstein, for his part, it seems, didn't give any detailed answers, according to our sources, but did point the incoming chair, saying that this gives Credit Suisse an opportunity to reassess strategy. Gottstein, at the moment, it seems, is really being led by his bosses. We understand that it was the board that decided to replace both the chief risk officer as well as the head of the investment bank. So at the moment, the CEO stuck between disgruntled staff and his bosses that are increasingly taking over control, Matt.
All right, Danny, thanks very much for that. Danny Berger talking about the continued fallout of Archegos and Greensill. Meanwhile, the AstraZeneca blood clot drama rumbles on, with the EU and UK drugs regulators offering disjointed messages about who should be able to get the vaccine.
The benefits of the AstraZeneca vaccine in preventing COVID-19 overall outweigh the risks of side effects.
Adults who are aged 18 to 29 years old should be offered an alternative COVID-19 vaccine in preference to the AstraZeneca vaccine.
The reported cases of unusual blood clotting following vaccination with the AstraZeneca vaccine should be listed as possible side effects of the vaccine.
Changes in preference for vaccines are business as usual, and this is a course correction.
Sam Fazeli leads our pharmaceutical coverage for Bloomberg Intelligence. He joins us now to talk about this problem, Sam. And it's interesting, medical professionals, regulators giving mixed messages at a time when it's probably very unhelpful, isn't it, to the continued fight against the novel coronavirus?
Yeah, hi, Matt. Yeah, I mean, look, at the end of the day, the UK MHRA is the country's regulator. The EMA is the supranational regulator for the European Union. And therefore, the countries individually can make their own decisions. So what we could actually say is that irrespective of what the EMA says, the European countries, the continental European countries, are likely to be running with and continuing to run with the above 55 or 60-year-olds to get the Astra vaccine. And in the UK, they're going with the above 30. So the discordance, I think, is still with the UK regulator as opposed to the continental European regulators.
Yeah, not a lot of consensus there. Thank you so much to Sam Fazeli of Bloomberg Intelligence. And as Sam mentioned, the over 30s in the UK now no longer going to receive the AstraZeneca shot. But one of the shots they will be offering is Moderna. And those shares are higher in pre-market trading here in the US. They're up about 1 percentage point at this point in time. Some other stocks I want to check on as well include Apple. Not a massive move in early hours, up just about 0.7%. But if that gain holds, it will be the 6th-day high in a row for that mega cap tech company. So that streak, something to watch, would be the longest since January. And then elsewhere in tech, I'm keeping an eye on Snap. Shares were up 6% yesterday, up another 2% or so before the bell this morning. Optimism around its introduction of a shopping feature and potential acquisition of shopping app Screenshop. And then speaking of social media and potential acquisitions, Twitter, of course, was reportedly looking at buying Clubhouse for $4 billion. Those talks are no longer ongoing, but nonetheless, Twitter is up by about 1.6% before the bell. Francine.
Yeah, $4 billion. It's pretty incredible. I mean, I've been on it a couple of times, and of course, Twitter, launching as a similar service, which I have to say is less good. Coming up, we talk about the markets, the FOMC, and maybe she'll get a question on Clubhouse. Maria Weitmane, the senior multi-asset strategist at State Street. And then after that, we'll also be speaking to the Luxembourg finance minister. He's Pierre Gramegna. We'll talk to him about taxes, and we'll talk to him about the EU Recovery Fund as well. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Leave behind a tough first quarter of the year. Actually, that is the main reason why we're going to revise downwards our forecast for this year. We were expecting to have around 7% growth this year. It may be smaller due to the delay, 1 quarter delay in terms of the recovery. And that was the third wave that hit us harder than the second wave. Nevertheless, what we see is that March was very fast improving. All indicators are going towards the positive. And we are actually quite optimistic that by the summer, a big share of the European population will be vaccinated.
That was Spain's economy minister, Nadia Calvino, speaking with me and Mark Cudmore earlier. Fantastic interview. I highly recommend you check it out on Bloomberg.com in full. But I have no transition to really the U.S. economy, Francine. And that's what I'm focused on here. Actually, it's the Fed. What I think is interesting is we still have a rate hike in December of 2022, almost fully priced in, right now at 24 basis points there. Even as dovish as Jerome Powell and the Fed came off in the minutes, and as dovish as I'm sure he'll come off today, the market expects the Fed to, I guess, flinch in some way and have to raise rates at the end of next year.
Yeah, it's a good chart and actually goes straight to what we want to talk about with Maria Vietmani, Senior Multi-Asset Strategist at State Street. Maria, thank you so much for joining us. I mean, we heard from the Spanish Economy Minister, also Deputy Prime Minister, and we looked at that chart and what the Fed could do, given what Matt just showed us on the terminal. Is there a concern, actually, if you're a strategist, that Europe will really be left behind because we're not doing enough stimulus because vaccinations are so slow? And if it's left behind, is it already priced in?
I have to say, I'm still, you probably remember me being very bullish strategist. I'm still very, very bullish strategist. I'm kind of in the camp that economic recovery is coming very strongly, earnings recovery is coming very strongly, and indeed, I'm very, very carefully watching interest rates market. And as Matt has been saying, that one cut is hiking cycle is kind of priced in starting in end of 2022. After that, we have another almost another 5 cuts priced in, and that's about it. I mean, it's very hard for market to price anything more. So what we are now left is a background where you have improving earnings outlook, improving economic outlook, and rates staying pretty much where they are, and that's very, very constructive. I'm very happy to buy that market.
Okay, what specifically do you buy, Maria, in this kind of market? I mean, do you go for, corporates? Do you go for stocks, or actually do you go for corporate bonds?
I'm coming from equities background, so I love buying equities. And within equities, we'll buy risky equities. So we're happy to buy small caps. We're happy to buy kind of commodity-linked sectors, countries. We actually recently upgraded European stocks. And in Europe, the story is really, really interesting. And it kind of links a little bit to kind of your previous interview with Spanish minister. And kind of this idea that Europe might be a little bit behind in terms of vaccination rate. And that seemed to be weighing quite a lot on currency performance. And as we know, European equities are dominated by kind of cyclical exporters. And if we have strong global growth and slightly weaker currency in Europe, that should support earnings even more and support European stocks even further. So that I think is actually quite interesting and maybe slightly kind of anti-consensus idea that we can buy European stocks when things are a little bit worse in Europe in terms of vaccination and why effects on currency.
Yeah. Well, and I think it's fascinating, Maria, that you kind of see this link in the UK as well. Some would say it's tenuous, but I have a chart here showing the euro-pound spot price. And yesterday, when we got the news out of the UK that they would limit AstraZeneca shots to those over 30, basically, you saw a bigger jump in the euro against the pound. Is a weaker pound going to make you want to buy more UK stocks? Is this kind of ironically, a slowdown in the vaccination process in the US, ironically going to push you towards, or in the UK, going to push you towards UK stocks?
I have to say UK is actually our least favorite market, but I see your argument, and I suspect it's probably too early to say that the kind of AstraZeneca maybe kind of setback or limitation of AstraZeneca vaccination for under 30 is really going to set back very far UK vaccination program. I mean, UK is still overall leader in terms of vaccinations. The other really, really important factor for kind of thinking about virus in UK is actually, I mean, we feel quite excited in UK that we're coming out of lockdown, but if you look at the current restrictions, actually quite a lot stricter than in many European countries that are going into lockdown. So lockdown here has been very, very restrictive, and that allowed to put kind of infection rates and hospitalization and deaths actually very, very low level. So I think AstraZeneca news could have been better, but I don't think it's really detrimental for a vaccination program and currency, and hence, I mean, that particularly maybe not going to support UK stocks that much.
All right, I'm taking you all over the map here. I'll pull you right back to the U.S., Maria, and you said you're bullish, continue to be bullish. You're not alone. We see now U.S. investor sentiment more bullish than bearish than it has been since 2017. A big spike up here in bullish versus bearish sentiment. Are you concerned that that trade is getting a little bit crowded, valuations a little high?
Yeah, that's a good point. And actually, I've just been on your radio interview. I had exactly the same question. And I think the answer is that consensus is not always wrong. I mean, we want to be contrarian and we want to be different, but consensus is not always wrong. And I really struggle to see a lot of negative factors. As I said, earnings are improving, interest rates are not going higher. But what is also interesting, if you look at cash on the sidelines, and that's really been kind of fairly old argument, there is still plenty of cash on the sidelines. The money came out of stocks a little bit in Q1, but if you put it into perspective of how much money is there, it's still very, very significant amount. I mean, we look at mutual funds data, and then, I mean, kind of thinking about retail investors, corporates, there's still a lot of money, and maybe not all money will go to stock market, maybe they will be spent and go into earnings, but it's still a very substantial amount of money there.
Maria, obviously there's a lot of potential upside catalysts, but how much of that could be muted by the potential downside of a 28% corporate tax rate here in the U.S. that could come with all that stimulus?
Yeah, that's actually a very interesting question, and I have to say we're still debating in our team. So it's on one hand you have spending, fiscal spending, infrastructure spending that unequivocally good for earnings and future profitability. On the other hand, you have tax. So I think there is some balancing act. And I think it would be very, very sector specific, which sectors benefit, which sector might suffer. But I wouldn't say that increase in taxes to pay for infrastructure is necessarily negative. So I think you have to be a bit more nuanced, a bit more detailed. And we'll get more of that information as kind of we see which ways the tax negotiations are going, where infrastructure spending are going. I mean, there's still a lot of question mark how much will be passed at what form, where Republican and Democrats can find common ground, where it goes to reconciliation. So I think it's fairly long-term discussion. I don't think it should weigh on market in immediate future.
Maria, thanks so much. Maria Weitmane there, Senior Multi-Asset Strategist at State Street. Now, coming up, more of our coverage on the IMF spring meetings. We'll be speaking to Vitor Gaspar, the IMF Director of the Fiscal Affairs Department. That interview 1:30 p.m. in London, 8:30 a.m. in New York, and this is Bloomberg.
shadow minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, the early edition. I'm Francine Lack in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the first word news. And President Biden says that passing his $2.2 trillion infrastructure plan is urgently needed to keep the U.S. competitive against China. Now the president calls the package the biggest jobs investment since World War II. Republicans have a number of objections, one of them being that corporate taxes would be raised to pay for the bill. Now, a potential boycott of next year's Winter Olympics in Beijing could be the next big battle between the U.S. and China. The White House says the U.S. isn't discussing any joint boycott with potential allies. Still, China has gone on the offensive. It says any attempt by the U.S. to criticize China over human rights would flop. And the British government says it remains on course to meet its coronavirus vaccination target. Authorities also moved quickly to address safety concerns after the AstraZeneca vaccine was effectively ruled out for people under 30. Regulators in the UK say that 79 people among the 20 million in Britain who've gotten the AstraZeneca shot suffered from rare blood clots. And finally, in recent months, Twitter has held talks about buying Clubhouse, the buzzy audio-based social network. Well, Bloomberg's learned that companies discussed a potential valuation of roughly $4 billion. $4 billion. I read it 3 times. Discussions are no longer ongoing, and it's unclear why they stalled. Matt, I'm kind of a fan of Clubhouse, although I don't really have time to go on it. But really, who makes it? Elon Musk. I mean, he tweeted about it, and then he went on it, and there were, over 2,000 people listening in. It's not the level of Twitter in terms of participants, but it's pretty fun.
I thought that was the only useful thing that Clubhouse has ever delivered. I was so touched when you sent me an invitation to Clubhouse, and I felt like I was a member of an exclusive club, like a smallworld.com. But then I realized it's useless. I don't understand why anyone likes it.
Yeah, admittedly, Francine also invited me, and I think I've been on it twice since then. But thank you again for letting me in the club, Francine.
Oh, that hurts. Us 3 on Clubhouse tonight, 7 p.m. for a Surveillance Early Edition special. Coming up, we speak to the Luxembourg Finance Minister. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Katie Lyons in New York. Now, there's a couple of things going on, Matt, that's at the margin actually impacting markets. But I guess the big market story was the Fed, the fact that we didn't hear anything new. But then there are these market stories like Archegos. Every day we talk about Archegos. Every day we talk about vaccinations. And now we also talk about Bitcoin and China potentially using it to rival dollar.
Yeah, you know, I thought that was a really interesting sort of under-the-radar story. Peter Thiel, who is pro-crypto, as he says, a holder of crypto assets, said that China could use Bitcoin as a weapon against the dollar. It wasn't clear to me if he meant the government or sort of the Chinese people as big holders of Bitcoin, but I thought it was a pretty interesting comment coming from somebody definitely not talking his book. At the same time, Bitcoin rose today. I think we're up over $57,000 right now, so it hasn't really hit the currency, and this has been a concern, the Chinese holdings, for a while, but interesting to watch for sure.
Yeah, it's interesting. Something that we've been keeping an eye on is, you know, the idea that, of course, the dollar's reserve currency gets hit if Bitcoin becomes much larger and it remains unregulated. Now, Kaylee, what else are you seeing in the markets?
Two words for you, Francine: record highs. We have them in Europe again. We had them in the U.S. yesterday. And once again, we look set for a record open come the opening bell in about 4 hours' time, with futures up around 10 points at this point in time. That dovish Fed really aiding risk appetite. But it's not just equities that investors are buying. We're getting a bit into the bond market as well. Yields coming in 2 basis points on the 10-year. We're sitting right around 1.65%. It's a really interesting story in the Treasury market. The economic data surprising to the upside, yet not a huge move upward in yields. I also want to keep an eye on oil today. It's lower now by about 0.8%. That demand picture is really the question, with the virus raging in places like India and Canada. So that has WTI crude holding below $60 a barrel. But not related to crude, instead related to clean energy. A number of stocks on the move in pre-market trading. You already had EV and clean energy players getting a nice lift in recent days based off of Biden's infrastructure spending. Now maybe an additional lift on reports that the Biden administration is considering doubling the U.S.'s climate goals, 50% reduction in carbon emissions potentially by the end of this decade. So you have the likes of ChargePoint Holdings higher by 4%, and then QuantumScape, Plug Power, and Tesla all also higher by 1% or more before the bell, Matt.
I love to see that board of EV stocks. Really interesting stuff to watch, and obviously it's an industry that I follow closely. Are any of those companies paying a lot of corporate taxes? Very unlikely. Of course, they're incentivized with deductions. But really, are any corporations paying very many taxes? It doesn't feel like it. If you look at this chart, which is a U.S. chart, right? It's basically what's funding the government. The white line being individual taxes, the blue line being corporate taxes. The chart goes back to pre-World War II, and corporate taxes post-war were funding the government at about the same level, about the same rate in terms of percent of GDP as individual income taxes. They've been coming down since then. So it's very interesting to see that they float ever lower. Now corporate taxes only fund the government to 1.6% of GDP, whereas individual taxes are 8.8% of GDP. The question is, Francine, will the Biden administration push to really change this? Certainly they want to.
Right, and this goes to the efforts to reach a breakthrough on a global tax deal, Matt. And of course, Bloomberg has been, covering the story and has learned that the U.S. wants countries to be able to tax more corporate profits based on revenues within their borders. Now, it comes as the G20 finance chiefs have pledged to make progress on this overhaul of the international tax system. So joining us now to talk about the Recovery Fund, but also about the tax system, is Pierre Gramegna. He is the Luxembourg Minister of Finance. Minister, thank you so much for joining us. Now, of course, Luxembourg is one of these low taxation countries. What was your reaction to the U.S. proposal?
Well, I think that the U.S. proposal comes exactly at the right time. It is a proposal that shows that the United States wants to engage more in multilateralism, which is quite a change to the previous administration. And if we want to have a new international tax landscape, well, we need to do it all alone. We cannot do it all alone. We should do it all together in the OECD framework. So that's the first good news. The second one is that we need more solidarity. We need to break the mold of many multinationals trying to reduce their taxation close to zero. And that's been recognized by all observers. We must avoid a race to the bottom in the field of taxation. And Luxembourg is very pleased that this discussion is taking place and that we want to reform this. We need a level playing field, and we support that.
But, Minister, you know, we heard, for example, from the Irish Finance Minister saying that tax policy inside certain parameters can be used as part of a competitive offering. Would you argue that that should be the case for Luxembourg?
Well, I think that Europe has already implemented quite a few tax reforms which transpose recommendations of the OECD over the last 5-6 years. And I think that taxation will play less of a role in the future in attracting companies if we have a common framework. So if we have, for example, a minimum taxation at OECD level that is shared by all major countries, well, then it's other criteria that will play a role. For example, in the case of Luxembourg, a AAA country, a country that is predictable. And so I think the recognition that we need to avoid that is key. The other very big risk is if we cannot agree on that, we will have national initiatives in terms of digital taxation, for example, and we must avoid that in the future, also because this has caused a kind of trade tensions between Europe and the United States. So I think that the proposals of the Biden administration go in the right direction and in the best interest of both Europe and the United States. It is clear that some European countries, for example, small open economies like the Benelux countries, Scandinavian countries, Ireland, have specific considerations to value and to put forward that need to be taken into consideration. But I think the global direction is the right one.
Can I ask you about EU spending? Everyone was so excited last year at the Hamilton moment as it was branded the 750 billion euro rescue package. But that money won't even be spent until probably the middle of next year. Meanwhile, the U.S. has already agreed and started to spend $5 trillion, and they're looking at now another $2.25 trillion in infrastructure spending. Does the EU response strike you as feeble?
Well, the first thing to say about the EU Recovery Fund is that it is really a Hamiltonian moment in the sense that we are here developing a solidarity that has never existed in the past. Now, on top of the EU Recovery Fund, which will be roughly 750 billion euro, there will be national programs to boost the economy, to save jobs, and especially to boost investment. So one needs to look at the full picture. If you compare what the United States does on the one hand, and you only look at the European response as such, you're missing a large part of the push to the economy that all European countries are giving. I can tell you, in my country, we are keeping investment, public investment, and especially investments in the field of climate change and in the field of digitalization at extremely high levels as we've never seen them in the past. Right. So at the level of 4% of GDP, for example. So let's not compare apples and pears.
It's a good point. It's a good point, and it's an important point. You're right about that. What I'm concerned about is the sloth of the bureaucracy of the European Union. It's striking when you look at how badly the EU failed in terms of getting vaccines together, and when you look at the fact that they have to wait over a year to start spending money that's been agreed. If the largest economy in Europe, Germany, doesn't block it constitutionally. That's got to be something that Brussels has to change, or the EU has to change. Would you agree?
Well, I think we're putting into place a recovery and resilience fund for the first time. It's learning by doing. What I find as important as the relatively slowness that you highlight is that we want to insist on quality of investment. 37% of those 750 billion will be on climate change and environment, 20% on digitalization. And if I look at what has happened in Europe in the last 10 years, we must realize that we had a period of underinvestment in most European countries. And luckily, with this recovery fund, we show the way where investments should go. It's not about increasing expenditures with running costs. What we need to do is quality investment, and the recovery fund will be an example also for national policies how to prepare for the next challenges, and one obviously is climate change. And I'm glad that the United States is now also recognizing that climate change is key and has joined the Paris Accord, so that we work hand in hand in this common challenge.
But does Europe need to have a bigger fiscal spend to actually just try and catch up with the US? It's a simple point, it's a contentious point, but is that what you would like the EU to do?
Well, I think the quality is as important as quantity. So what strikes me in the United States policy is that they could trigger this spending very quickly by supporting consumers. Well, this is good. This is a short-term measure. I must say, in Europe, we have done that from day one, from March last year. In my country, in many countries, we have short labor schemes which prevented losing jobs. So we have done the same. It's called differently. So again, let's separate what is saving jobs, current spending on the one hand, and organizing the future with new investments. So in that sense, I think that our two strategies will look alike, are about to look alike, and I think that's what we need to focus on.
You mentioned the green spending that Luxembourg is doing, that many European countries are doing, and indeed your biggest neighbor has seen a huge rise in the popularity of the Green Party. Angela Merkel's centrist CDU is just slipping down in the polls as this never-ending lockdown fails to achieve, or I shouldn't say fails to achieve, finds it difficult to fight the rise in COVID infections. Do you think this green wave is going to sweep over the rest of Europe that we see here in Germany?
Well, it's difficult to compare one country to another. I think the Green Party has had wind in its sails for a long time in Germany. Well, in the case of Luxembourg, the Greens are part of the coalition. They were also the big winner of last elections in 2018, and we have embarked as Luxembourg on a way of green finance, of sustainable finance, as a way to prepare the future, as in fact the way to ensure the transition from a carbon-heavy economy to a carbon-less economy. And I think other parties, like mine, for example, which is a liberal party, have to embrace that challenge, that transformation. Now, if you leave a boulevard in front of the green parties all over in Europe, and the other parties do not embrace that, obviously the green parties will gain a lot. But you have also to consider national situations. There are countries where the green parties are much weaker traditionally than they are in Germany. But for Luxembourg, for example, the fact to have the green parties in government keeps you really focused on that issue.
Minister, thank you so much. I admire your optimism, actually. I have to say, talking about quality over quantity, when we haven't seen a penny from the EU yet, I hope for all of our sake that something will be dispersed soon. Pierre Gramegna there, the Luxembourg finance minister. Now, coming up, Bitcoin could be the latest threat to the US dollar. That's the latest view from the venture capitalist Peter Thiel. We'll discuss that next, and this is Bloomberg. Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing out at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim, we're going to be riveted to that, and we're going to do what is required.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
This is Bloomberg Surveillance, the early edition of Francine Lachman, London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, the billionaire investor Peter Thiel appears to have had a change of heart towards cryptocurrencies. Now, in an appearance at a virtual event, Thiel called Bitcoin a Chinese financial weapon that could threaten the dollar. Well, let's discuss all of this with Eddie van der Walt, Bloomberg MLive editor. Now, Eddie, just to make sure that everybody understands, you can still be long crypto. You can still say, actually, I want to own Bitcoin. But worry about the long-term effect of China dominating the space because it could rival the U.S. currency longer term. And I've heard this in the past. How explosive was it that it came from Peter Thiel?
I think it was an extraordinary comment on many levels. Because in the crypto community, any sort of negative comments are just not taken that well. So it's interesting that Thiel, he never really worries about what anybody thinks, but it's interesting that he's willing to stand up and say this. But the second thing is, for many in the crypto community, taking down the dollar is not a bug of crypto, it's a feature. That's what they want to do. They want to see the dollar disappear. So this is interesting that for many, that Thiel now says that this is a risk.
Well, but Eddie, when it comes to the threat to the dollar, is the bigger one from Bitcoin itself or from digital currencies controlled by central banks like the digital yuan?
Right. I think it is a risk that if Bitcoin or some other cryptocurrency become the dominant currency, then you start to worry about geographically where does it get mined, geographically where is the power centers and so on. But I think this is fairly far down the road. I don't think the Fed has got this on their radar just yet.
I want to point out, just for posterity's sake, that Peter Thiel's name has a hard T in it. Kind of like the color that's a greenish blue. It's teal.
This is
Peter Thiel.
This is Dogecoin all over again, isn't it?
Dogecoin. Okay, so I think I think it's always fascinating to me, Eddie, when we talk about Bitcoin versus the dollar. A lot of people, including the great Eric Schatzker, have questioned the carbon footprint of Bitcoin, and I always think about the giant carbon footprint of the U.S. dollar. Arguably much larger, since it's a world reserve currency that backs the military to guard the oil, right? But Bitcoin, I don't think anyone is under the illusion that it's going to take over the dollar's role, as it's not really very transactionary, is it?
No, not the top layer, right? But I think if you talk about second layer cryptocurrencies, Litecoin, or even the Lightning Network that sits on top of Bitcoin, these things do have the potential to be real transactional currencies. The deflationary problems and all of that aside. But as to the problem about the carbon footprint, I think there's two aspects there. I've looked at this for years. One is how much electricity is consumed. The second is how it's generated. And a lot of it's coming from hydroelectric power, so it's not quite as dirty as people think.
All right, Eddie, thank you so much. We have to get you back on for that. Forget the Chinese financial weapon. We have the Miller financial weapon. Eddie van der Walt, our Bloomberg MLive editor. Now, coming up a little bit later today, San Francisco Fed President Mary Daly. That's at 7:30 p.m. in New York, 12:30 a.m. in London. And this is Bloomberg.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, the early edition. I'm Francine Lackman, London, Matt Miller in Berlin, Kaylee Lyons in New York. Tom Keene is also here, co-anchor of Bloomberg Surveillance. He joins us. And Tom, I know you're focusing a lot on the IMF with the virtual meetings. We've had some stellar guests on the program, and that translates into what they do to, with debt, and it could actually move yields at the margin.
Well, moving yields at the margin within the great divergence, that's certainly what Kristalina Georgieva talked about yesterday, not only the financial divergence, but the pandemic divergence. What I see this morning, Francine, is a reaffirmation of whether the 10-year yield, and the chart is simple. It goes back ages and ages, and it really puts in perspective back 40 years how small, how minuscule this move up actually is. Stephen Major at HSBC today is really forthright. He does not believe in a high yield regime. He really pushes against consensus.
Yeah, and Tom, I know you and I are both fascinated about what's going on at Credit Suisse with, that supposed call yesterday with a lot of the upper management angry with the chief executive that they're just not getting enough answers. Yeah. And the fact that he said, well, we have a new chairman, so that could be a reset for strategy.
Maybe Mr. Gottstein needs to do a 64-page shareholder letter. Maybe that would recapitulate what Mr. Diamond's doing. But it is an issue that certainly will not go away. It is being monitored tick by tick.
Tom, thank you so much. I know Tom's also looking at luxury, so I'm looking forward to his thoughts.
I'm only looking for luxury because Pharaoh's back in the building, and he's such a fashion icon that I'm just trying to keep up.
As are you, Tom, only wearing Hermes, the co-anchor there of Bloomberg Surveillance. Now, there's a lot going on today, so this is what else we're watching. Kaylee, away from markets, you're also looking at golf.
Yeah, I wonder how many Wall Streeters that are working from home right now are going to have one eye on their Bloomberg terminals today and one eye on the television when the Masters tournament kicks off in Augusta, Georgia. Dustin Johnson, the reigning champ, he will not be competing against Tiger Woods after his car accident a few weeks ago, Matt. Can you even watch it in Germany?
I have downloaded an app on Apple TV, and I'm hoping that I will be able to spend literally all of my free time watching golf for the next week. Yeah, for sure.
There you go.
That's the same time as, is that the same time as Powell speaks? Because obviously I'm going to pay attention to Jerome Powell,
of course,
with at least one eye, and I expect him to be dovish. He'll be dovish. So then I'll go back to golf.
You need three eyes: golf, ECB minutes. We'll see if they front load PEP, and there's also that Powell, panel. So there's I don't know. It's going to be hard to actually decide which one to watch. Yeah, there is. This is why people make millions or they don't when they're trading currencies. Actually, on the golf or on sports events, we also heard that Roland Garros, the French Open, will be delayed by a week. Unclear what a week will actually do, Matt.
Yeah, does that help? I mean, are they going to be in a different situation a week from now?
I don't know. We'll be talking about the recovery, though, and vaccination uptakes. A little bit later on, our surveillance simulcast team will be speaking with Bill Lee, Milken Institute chief economist. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
The COVID cyclicals are catching up because of this reopening of the economy.
We're going to start to see spending go. That's what everybody says. And then we'll have to have a real conversation about inflation.
The gap between those performing well and those who are still struggling is just growing by the day.
We're going to see wage pressure with high unemployment for a little while.
As the market rallied, you started to see volatility climb again. That's typically not a great sign.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Coming into Thursday at all-time highs from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures up about 14 points on the S&P. We advance 1/3%. Tom, we've got to start with the infrastructure push, unraveling just a little bit down in D.C.
Yeah, that's certainly the backstory here is that's just not going to happen, and maybe that's a little bit of an oomph to the market to know that the debt is not going to come on, but it is a non-starter, and critically, it's a group effort as a non-starter. There may be different reasons it's a non-starter, but there's too many parts of Washington saying this isn't going to work at 2.x trillion.
Well, let's start with Senator Manchin in the Washington Post in an op-ed this morning, Tom, writing the following: the time has come to end these political games and to usher in a new era of bipartisanship. He does not want to go it alone.
Well, he doesn't want to go it alone, and also he wants to get reelected, and maybe he wants to keep a Democratic House as well. I go back, John, to the reality of the 2022 election, and that's the calculus on both sides of the aisle. How do you get to November of next year?
So here's my question this Thursday. What did I miss? Lisa, I left with a yield at 167.
Well,
right
where
now,
do you want to
165.
be?
Are you just trying to rub it in,
Over
basically?
the last 30 days, I think the average is 165 on a US 10-year. That's where we are.
Basically, John, this is your way of saying I missed absolutely nothing. Absolutely nothing happened. I will say this, though. I do want to just weigh in on the infrastructure plan.
Please do.
That the idea here is that it's going to get broken up. This has been the consensus all along. No one expected this deal to come out in the $2.3 trillion forum as Biden proposed it. The key is what form, what aspects, and how realistic are the different aspects. Yes, it might be smaller than the 2.3 trillion. No, realistically, if they try to push something through on a bipartisan level having to do with true roads and bridges, John, that seems more likely.
Tom disagrees.
John, I'm sitting here talking to the control room because we're moving this show forward. John, here's what you missed. The high point of your sabbatical was Kit Jukes explaining the challenges of bringing Harry Kane from a TOTS over to his arsenal and Lisa's arsenal. Jukes really saying this is probably not going to happen.
This confirming, I'm sure, that someone somewhere watching this program right now missed me. It's going to be back.
They did. We'll do the soccer talk later. I want to show a board, John, seriously, of what you missed. And Lisa was great on this in the bond market with high yield coming into new tights. Stephen Major this morning with an absolutely blistering note. This is the guy who's nailed it at the big houses on low yields. When shocks come, money flows to the safest of safe havens, government bonds invariably being the first choice. Let's not lose sight of the wood for the trees, poetic. Granted, there has been a U.S. cyclical upswing, but we are far from a rates regime shift. What really matters to bonds are relative valuations, which means, John, the real yield Friday afternoon and into the weekend is a must-watch this weekend.
That's kind of you, Tom. I appreciate that. And I think Lisa's read the same note, too. And the bottom line for Steve Major, markets appear to be extrapolating the near-term drivers behind high U.S. yields and missing, Lisa, what really matters.
Talking also about the international flows, and this, I think, is really important. People wondering whether U.S. yields can continue to rise without attracting that foreign buyer. We're not seeing that. We're seeing the foreign buyer come in, him expressing his view for lower yields ahead, as we're not out of this low-growth regime, regardless of infrastructure spending.
Can I get to the markets now?
Well,